Research team has passed the thousands of listed stocks through several filters like quality, growth and leverage and come out with an A list. So today we have two of our A list colleagues joining us to give us the aces that they have on their list. Ekta, what are you looking at?
Well, I'm looking at something which intrigues me as a company as well, is Divi's Labs. That company, just to put things into perspective, it raised 73 crores in an, or rather 17 crores in an IPO in 2003. That's when they had hit the market with an IPO. The current market price stands very close to its 52-week high of 2,483 rupees. It has a market cap of over 30,000 crores. Month to date, it's risen 16%. Year to date, around 31%. And on a 2 years basis, the stock has given returns of 100%. If you want to make an argument, a lot of the other pharma companies have also gained. For example, Aurobindo is up 30% on a year-to-date basis, Lupin up 33%, Dr. Reddy's up 30%. So the year-to-date gains are in line with a lot of pharma companies. 2 years also, there have been a lot of other pharma companies that have outperformed Divi's Labs. So say something like a Glenmark, which is up 172%, Lupin, which has given returns of 229%. But why do I like Divi's Labs? Simply based on the fundamentals. To give you a background in terms of what they do, they are a manufacturer of generic API, which is active pharma ingredients, as well as carotenoids, which is basically used in the synthesis of, say, the likes of vitamin A and the production of those kind of vitamins. It also does custom synthesis of APIs or active pharma ingredients. So it's not a company that produces formulations like typical pharma companies. It is a high margin business, which is the custom synthesis business. And to give you a sense, it has Divi's Labs has 70% market share in 2 APIs globally. That is basically an API called naproxen, which is used for pain, and another one which is used for cough, which is dextromethorphan. And these 2 APIs are mature if you want to talk about competition, and hence they are a limited competition drug or API segment for Divi's Labs. So you know that with 70% market share, there is continuity in terms of sales as well as revenue for Divi's Labs going forward. Also, the company is increasing their presence in a niche segment such as carotenoids, including beta-carotene. And beta-carotene is the largest segment in carotenoids which is available globally right now. 3-year CAGR growth stands at for revenue at 17%, profit at 18% in 3-year CAGR, EPS growth at 17%. Long-term debt is only around 30 crores, so their cash on books as of FY15 was 798 crores. If you look at their debt to equity ratio, it's a negative 0.3%, indicating that it is a cash surplus company. Its cash is greater than debt on books. If you compare it to peers, right now there's no comparable peer for Divi's Labs, like an apples to apples comparison. The closest would be something like a Syngene, which is trading higher than Divi's Labs in terms of FY16 and 17 PE post-listing. So Divi's trades at around 29 to 24 times. And Jubilant Life Sciences, which is catching up now, it's still very low in terms of valuations at around 11 times. Cadila is up only because it's a similar market cap to Divi's Labs. It's around 39,000 crores, similar to what Divi's Labs trades at. And Cadila, for example, is at a lower PE as compared to Divi's Labs. It's expensive nonetheless, but there are lots of positives for it. For example, they awarded shareholders with a bonus issue in Q1 FY16. Guidance is retained at 15 to 20% constant currency in FY16. Guidance of 37% margins in FY16, and that's because capacity utilization stands at 90%. They have estimated a 22% EPS CAGR for FY15 to 18. They have a strong client base, and this is the biggest trigger, is that they've got no history of US FDA issues with the company currently, and that's a big trigger for Divi's Labs in terms of the valuations being maintained going forward. So overall, that's the update on Divi's Labs.
Okay, that's Ekta's A list. Yes, that's important. I mean, in a market where almost every company is having some or the other US FDA issue, this one has a history of no US FDA issues at all.
Yes, and just a couple of things just to balance it out a little bit. I just want to point out the risks which I forgot to mention. There are the custom synthesis business that Divi's Labs has depends on offtake of customers, and hence that could be lumpy. The other thing is that 70 to 75% of their net, they have 70 to 75% of net forex exposure. Hence, it is dependent entirely on currency movement, and for a long period of time, the stock used to move based on what currencies were doing as well. But if you notice, it stopped doing that, because otherwise it should have been very volatile for Divi's Labs this year. But because of their fundamental approach towards the to the business that they have, it's managed to balance it out.
Okay, yes, and the IPO price way back in 2003 was about 130 rupees, and look where the stock is currently. Phenomenal story. You should actually read the story of Murli Divi. It's a great move that he's seen way back from when he was with Dr. Reddy's and then branched out on his own. But Agam, you have PI Industries.
Yes, and perhaps the most talked about agrochemical stock in this last 1 year, and I'll tell you why. It's clearly outperformed the BSE Mid-Cap Index. Now, this particular stock has gained over 60% in 1 year, as against the BSE Mid-Cap Index, which has gained about 16%. So clear outperformance coming in for PI Industries. Where's this solid growth coming from? Two core segments. One is the custom synthesis and manufacturing, which contributes to as much as 60% to revenues, and the balance comes from the agri-input side. To give you a little bit on the background, as far as growth is concerned, the three-year CAGR on revenues, it comes to around 30%. Once again, in terms of profitability, three-year CAGR comes to around 33%. And look at the margins. That's where we've seen significant expansion over the last 3 years. Margins have actually moved from around the levels of 16-17% to around 19 to 20%. In fact, its margins in Q1 were well over 24%. Moving on to debt too, it's got very little debt. In fact, its debt equity ratio stands at around 0.1 times with a debt of around 82 crores. And when it comes to cash flows, once again, a very positive scenario when it comes to operating cash flows. The only reason why it's seen negative cash flows in FY15 was because of investing activities. But I'm perhaps coming to the most important point, that's when it comes to valuations against its peers. So what I've done is that I've separated its peers into two groups. One is the peers which are growing at the same rate as PI Industries is going. That is around 25 to 30%. And when it comes to that, you have players like Monsanto as well as Bayer Crop Science. You have PI Industries stands at a better valuation as against these guys when you consider the forward earnings for FY16 or FY17. So as compared to Monsanto or Bayer Crop, PI Industries comes at around 31 times FY16 as against Monsanto going at 38 times and Bayer Crop going at 32 times. Let's also consider some of its other peers which are relatively lackluster in growth as against PI. Yes, PI is a little more expensive as compared to the other guys such as Rallis, UPL and Tata Chemicals, but you also have to consider that the growth for these counters is a lot less as against PI. But, you know, if you take all these peers together, PI has one advantage, and that is its presence in the custom synthesis and manufacturing business, which gives a significant leg up, especially when it comes to margins. That's also the reason why you are looking at PI margins at around 20%. Custom synthesis business right now, its order book standing at around 600 million. It's added, in fact, 20 million in the first quarter itself, and its revenues have moved up as much as 26% for at around 350 crores for the first quarter. So that's where you're looking at that big jump in not only in margins but in growth as well. And that's also the reason why a lot of analysts are looking positively and favorably towards PI Industries. And that's also the reason why it makes it to my A-list.
All right, guys, thanks a lot for giving us two of those stocks in our A-list. But just to mention once again and to reiterate, the stocks mentioned in A-list are not by recommendations from the CNBC-TV18 team. They are only companies that have exceptional balance sheets and good quality managements along with good revenue trajectory as well. They are not by recommendations. With that,